So hedge funds are the least bullish on silver in almost 4 years. Bloomberg putting out this report Tuesday. They also noted that investor holdings are at a near-time record. So what does this all mean for the metal? We'll be asking the silver guru, David Morgan, on the spot. David, so good to see you again. Thank you for being on Kitco News.
Well, thank you. It's good to be back.
All right, David, let's dive right into it. Silver hoarding, apparently at near-time records. This is what Bloomberg reported today, Tuesday. Would like to get your thoughts on this, since I believe this is something you've been saying for quite some time.
Yeah, I'd love to discuss this. It was an article that came out today, the 14th of August, and it was from Bloomberg. And in fact, I got a hold of the editor and thanked her for her job with the reporters, because it was a fairly objective article. In fact, quite objective, especially from the mainstream press. This is what I've been saying for quite some time to our members, is that even though the price is down, the silver that's out there is being tightly held. There's not a lot being sold back. Certainly there's some people that are giving up. But this article says that, I'll restate it, that basically the hedge funds are holding, their positions for the most part. And then it goes on to talk about what's left in the COMEX. And as I've explained many times, the COMEX has two different categories. One is the investor side, one is the dealer side. And the amount of silver held for investment in the COMEX is substantial. So there's really very little inventory in physical silver that's available to the marketplace.
So David, your thoughts are quite different from others I speak to who tell me, look, there is no silver shortage, plenty of silver in the world. What are your thoughts?
Yeah, and let me further that, because I want to be very objective here. It's hard for me. I'm biased towards silver, as anyone knows. But there has been an increase in the silver supply from roughly 2007 to present day, and gold as well. There's less mined, let's say, in gold than there has been in the past on an annual basis. That's a decline rate, but nonetheless, there's more pulled out every year. Silver is the same story, and the stockpile has been added to. But like gold, that stockpile, or the amount above ground, is being held tightly by investors, and the rest is being used by industry. So again, what's available to the market is very, very small. So even though the supply has increased in real terms from 2007 on, and in terms of mining production from roughly 2000 to present day, doesn't mean that the market isn't very tight. And so that's a point I keep trying to make.
So, David, let me ask you an initial question before I get to my second one. Is the price of silver where it should be right now? Is it high or not?
No, we're very undervalued right now in silver. And I think that we're going to go much higher over the longer term. What it's going to do this year, I think we're going to see an upswing presently, normally get a bottom in August, but I think the bottom is behind us. I really think we're going to see a slight increase through the rest of this month and an acceleration into September. And I think by the end of the year, you could see $35 to $40 silver quite easily, and gold up over $1,800.
So this leads me to my second question, David. If the interest in silver is high, has it not impacted the price and forced it to go higher?
Well, all markets move on supply and demand, as you well know, and the demand is pretty good at this level. It isn't a lot of offtake for the new silver supply. In other words, the demand isn't moving the price up, but nonetheless, the amount of silver that's being held is not being sold. So it's kind of static on that side. So all we need is a little bit more of a demand, either on the investor side or the industrial side, or both. And I think that's starting to take place on the investment side. And as far as the industrial side goes, you can make the argument that it's fallen off due to the world recession, et cetera. And in this article that we're talking about, they do make a case that, according to the IMF and others, there will be an increase in industrial demand due to the fact that this recovery is underway. I have my doubts on that, but regardless, silver's industrial demand is more consistent than most people think. And also the mine supply also follows the economic outlook for the world as well, and I'll explain that. Because silver is 70% a byproduct of base metal mining, if there's a big recession or depression or a big fall off, there's less base metal mining, which automatically brings less silver to the surface. And then you have this problem with the Pascalama mine of Barracks. That is one of the best discoveries over the last decade, huge silver supply. Problem being that their capital costs are double to perhaps triple of what what they basically put out to the public a couple years ago. And so this is really bad news for Barrick as far as, being good in their analysis of how much it's going to cost to get the silver out of the ground and, into the smelter. So a lot of things are adding up that are favorable to silver. The supply is increasing, but the demand seems to be overpowering the increase in supply. And I think, again, that will accelerate going onward.
So what about the slowing growth in Asia, David? Would that affect the price of silver going forward?
That has some effect, of course. I mean, that's where a lot of new demand is coming from, and it's partially investment demand, but it's particularly industrial demand that no one really considers. I should say no one, but most don't think about. It's your iPhones, your iPads, your computers, your electrical systems, et cetera, that use silver. And if it's slowing down in the industrial base, and it looks as if it is, or it actually is, certainly that could cut back on the amount of silver. And from this article, again, they state that the industrial use of silver in China has slowed, and I agree with that. So will that affect it? Yes, it will. But the main part of the silver market is still investment demand. And the problems that are out in the fore for the world to see, with this euro problem that's still unresolved, the U.S. debt problem, no one tackling the problem, just printing more debt, and you can't cure a debt problem by putting more debt into the system. Those, I think, supersede anything on the industrial side. And that's where more and more people will participate, not only in gold, but the silver market as well. And the thing about these markets and all markets is that people tend to follow the herd. So once silver gets above 30, 32, people that could have bought it at, 26 and change, or 27 or 28 or 29, they'll be anxious to buy it at 32, but they could have or should have or might have bought it lower prices. But once the momentum starts to build, it starts to accelerate. And that's the way this market moves. Most markets move. Silver seems to behave particularly in that manner because it's such a small market and it's got such a strong following for such a small amount of people that do follow the market.
So, David, let's just look at the hedge fund equation to the silver story, how hedge funds anticipate slowing growth will curb demand for the metal. Your thoughts? Well,
one is, again, that they're holding their positions. But what I'd like to add to that article is that if you look at some of the bigger holdings of silver that are out there in the public domain, you've got the Zurich Continental Bank, you've got the Central Fund of Canada, you've got Bullion Management Group, you've got the ETFs like the SLV, which are huge. Most of those outside of the SLV are people that are pretty pro or bullish on the silver market. In other words, I can't see Stephen Spicer as an example from the Central Fund of Canada, or Nick Beresheff from Bullion Management Group, or the people that run the Zurich Continental Bank saying, you know what, silver's really high, it hit 33, we're going to off it. No, they are probably going to add to their positions. If you look at Sprott Physical Silver Trust, they just added about 8 million ounces of physical to the price. When that came out, I put out to our membership that last time that took place, it was about 10 million ounces, and it moved the market up about $2.50 conservatively. I think it could do the same thing again. So the physical demand is going to run the market. 8 million ounces is certainly a small amount relative to the fact that we're mining over 600, 700 million ounces now, or 750 million ounces, depending on which study you look at. So that's a drop in the bucket, but it makes my point. All markets move at the margin. So if 8 million ounces at one time can move the market up a couple bucks, and that's to be determined, then what that says is all that silver that's out there, and the supply really isn't that great, is being held tightly. So any new buying is going to move the price up. And that's pretty much being proven out.
So, David, I know you've told me this in the past, that the silver market is very volatile and a lot of investors may shy away from its price swings. So is it really only for those who can stomach the volatility of the market?
Well, partly, but I would say a precious metals portfolio is metals. So I advocate gold and silver, and perhaps if you're pretty, very well off, you might even add a little platinum, palladium to the mix. So I think you should have a metals portfolio. I think it should be balanced, and I think that it should be balanced based on your ability to take the volatility. If you can't take much volatility, weight it more heavily in gold. If you really want to swing for the fences, you're younger or whatever, you've got an attitude such as that, then certainly you might consider taking a larger position in the silver market. But that all goes into the investor's individual ability to manage risk. And that's why silver can do what it does. I mean, silver at one time in this market had a ratio of 35 to 1. Today, it's about 58 to 1. So if you're able to do a position trade, or in other words, trade the gold for silver or silver for gold at the right times, which is one of the things we do at the Morgan Report, then you can take advantage of that volatility. You don't let it scare you, let it work for you. Of course, it takes guts to do those type of things, and we don't get it perfect every time, but the idea is correct. When silver is overvalued relative to gold, you take a position that's different than you might have, in at another point in time.
So, David, just some final thoughts for investors for the month of August. Will we see more action come September?
Yes, it has been slow, and summers usually are. I'll just give a little shameless plug. If you want to follow our work for free, just go to the YouTube channel, Silver Guru, or go on the Twitter account, Silver Guru 22. Either one of those, I put out a lot of information for free for the public still. I don't write much anymore, as you know, Daniela. I'm sort of tired of writing for the public. It's a lot easier to do an interview like this and put it up on the web. So thank you for the opportunity.
David, when will we see you at a next show?
Well, I'll be, I think, probably at the San Francisco show. And it's Silver Summit's coming up here in October. So I'm sure Kitco will be there, and this should be a really good one. It's the 10-year anniversary. And for those that care to know, I'll plug myself again. I'm going to put on the silver suit again. It's only the second time I've ever done it. And I'll walk to this stage. I'm not going to show my abs or anything, but I will be walking up to the stage in a silver suit. So it'll be good for a laugh.
Thanks, David. Look forward to it. And thank you for watching this edition of On the Spot. You can email me at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.